yet.
Okay, all right. Now let's talk about the stress test, the mutual fund stress test results, which I think we should get tomorrow. Surabhi, tell us more.
Okay, so I'm going to try and simplify it as much as possible. I think most people know it, but for those who've kind of missed out on this, why are stress tests happening? Because there was a dialogue between SEBI and the mutual fund industry about the possibility of a little bit of excessive risk building up in small cap funds and in mid cap funds, because that's where all the money has been gushing in over the last couple of months. So then the body decided to get together and say, okay, let's do these stress tests. Actually, they are an ongoing phenomena in the mutual fund industry. Now, SEBI says the results must be made public so that investors can figure out whether they should be investing any further in small cap stocks, mid cap stocks or not. So what is a stress situation? That's the first thing. This is being described as a situation where there are two conditions. One, only 10% of market participation is available to a mutual fund scheme. When I try to understand what that means, what is 10% market participation, one interpretation was that instead of, let's say, 100 crores of total turnover, there's only 1,000 crores, there's only 100 crores of turnover on that particular day with that particular scheme. The second condition is when trading volumes are 3 times the normal, trading volumes on all the individual scripts that are part of a portfolio. So this is basically the definition of a stress situation. So now what do mutual funds have to do? They have to check how quickly can they liquidate the portfolio and basically meet the redemption requests that might be coming in on such a stressful day. So they have to declare how long will it take, the number of days it will take to liquidate 25% of the portfolio and 50% of the portfolio. Please remember, the end objective is very simple. SEBI wants to ensure that if it is a high stress situation and if investors are asking for redemptions, if they want their money back from these funds, they get their money. That's the sum and substance of it. Interestingly, these tests are not going to take into account the top most illiquid securities in a portfolio, which comprise up to 20% of the portfolio weight. So it's a little technical, which is why, Ronak, I wanted to come to you. And it's a two-part question. One, just explain to us this concept of 10%